But let's go to our next segment, which is Wrap the Week. Every Friday, what we like to do is take a step back, look at the big picture, think about how the market has evolved week to week, and sort of look at some longer term trends. So I'm going to start at the Mindful Investor chart list. Then we're going to go to some of the scooter reports to see how things have changed week to week. If you missed it earlier in the week, we actually just added this a couple days ago. If you go to the Mindful Investor chart list, and if you can't get to it, just go to my blog, go to the articles section, look for the Mindful Investor. You'll see my name, and you'll see at the very top a link to this chart list. You can click Save to Chart List. It'll put it right into your own login, so you can take these, make them your own, make changes to them, make annotations, do whatever you like. But my charts are your charts, friends. So let's go through some of these big picture trends. So starting with the long-term picture of the S&P 500. And again, I don't mean to beat a dead horse with this, but the primary trend is positive. So all the speculation about what might happen next year and all of that is secondary to the fact that the trend is positive. And we know that from another reasons. Higher highs in price, higher lows in price, upward sloping moving averages. This is the PPO based on the long-term exponential averages that I use, the 21 and 34 week, very, very positive. And in the more short-term side, this is a weekly PPO using the traditional settings, the MACD or PPO settings, also bullish as of mid-October. So firing on all cylinders, overall the trend is positive until proven guilty. And we saw that confirmed with breadth. I think in the last couple of weeks, one of the big confirmations we've had of strength going into the year end is the fact that breadth has remained so positive, especially in mid caps and small caps. So even though small caps, flat a little bit today, overall the accumulation, the breadth on each of those cap tiers, very, very positive. Also a healthy number of new highs. So even in the last week, we don't have today's level updated just yet. I would assume this will jump up a little bit based on the fact that we gapped higher on the S&P and a lot of stocks are seeing new highs. But in the last week, we've had 10 to 20% of the S&P names hitting a new 52-week high every day. And that is not a small feat. That does not happen that often, especially the persistence of these new highs. It shows you a lot of stocks are going into it. Now, that's looking at the S&P, which is granted a pretty large mega cap sort of universe. The last one I want to talk about before we get to some of the scooter reports is looking at breadth relative to the 200-day and the 50-day moving average. This is one of the charts we referred to a lot recently. Thought it'd be good to take a step back here and think about the breadth for the S&P by this measure. So 80%, 4 of 5 stocks in the S&P 500 are above their 200-day moving average, which on the surface sounds very positive, and I would totally agree. The challenge is when you look back, that's where it's been when the market's pulled back. Because if 80% of the stocks are above the 200-day, that is a huge swing, a huge momentum shift with so many stocks in a primary uptrend that usually tends to be unsustainable, right? That tends to be a point. Even though the primary trend could continue, it means we're pretty overheated because so many stocks have gone up so much and are so far above their 200-day moving averages. So, again, it might not happen immediately, but it's certainly telling you that we're at that point where we would near a potential top if this past pattern continues. Also interesting to see the percent of stocks above their 50-day. This had been in a stepwise motion lower. So as the market had gone higher, less and less S&P names were above their 50-day. So each time the S&P swung back above its 50-day moving average in pink, less and less stocks were actually mirroring that. They weren't quite getting above it. That has now changed. That pattern has broken. And now, again, you have almost 80% of the S&P stocks back above their 50-day. So you've really had a rotation back into the average stock. The average stock in the S&P is doing fairly well. So overall, the trend is positive by many measures. When we get to the mailbag section, we're going to talk about, maybe we'll hit on a theme here in a moment about some of the industry and sector themes. You know what? Let's go there. So we're going to shoot over to some sectors, and we're going to look at the XLV. So, the challenge that we have is the fact that so many stocks are up so much. And again, that's a good thing. That's probably what we want as equity investors. The challenge is, what does that mean when things become a little overheated? So I'm going to add RSI here to the chart of the XLV. And now what we're seeing is, on a relative basis, healthcare has improved. Overall, been sort of a market performer, broke to new price highs, returns on a relative basis improving. That's all positive. But if you look at the RSI in the bottom, we had this bearish divergence of higher highs in price, lower peaks in the RSI. And look how that emerged the first couple weeks in December. All of a sudden, look how this picture has changed. Now, as price has gone higher, that bearish divergence really wasn't confirmed. We actually broke that pattern and went back positive. The RSI is almost nearing the extreme overbought region when the RSI is above 80. And again, on average, what that tends to mean is the upside momentum is so strong, even though you'd have a little bit of a pullback, you'd expect at least one more leg up to digest all of that momentum. The momentum's so strong, the buying pressure is so strong, it's not just going to go straight down, most likely. You saw that back here at the end of November, where it was extremely overbought. We pulled back a little bit, but then continued at least one more leg higher. Now it potentially looks like that pattern's going to continue. That might be the strength we're looking for leading into year end. That would satisfy the seasonal tendencies of strength of sort of large cap stocks leading into the first of the year, and then could open the door to a potential correction in the first quarter. Obviously, is sort of what that might line up. Now, when you look at something like the XLV, you have to look one level down. So if we look at the drug index, you can see that parts of the healthcare sector are actually already extremely overbought. So the DRG, the pharmaceutical index, with an RSI well above 80. So again, what that means is the momentum is so strong, you'd probably expect a little bit of a pullback, but at least one more leg higher. So we might digest the gains, but overall still seems like a pretty decent place to be. Let's look very quickly here at these scooter reports. We're going to look at how some of these things have evolved. And what I like to do is look at industries, and I like to look at 1 week. And now I can see what has moved. What groups, what industries within the large cap space in the US have been up the most? And you can see there's a lot of real estate in here. We talked earlier this week about the emergence of real estate, the strength in a lot of real estate charts. 3 of my 5 sort of sleeper picks were all REITs because they just surfaced up. So holding and development, hotel and lodging, all up at the top here. You also have marine transportation, home improvement retailers, food products. So these are a number of different sectors that are actually represented here. And then multi-utilities, one of the better sectors this week. So some interesting, certainly more conservative names. I'm seeing distillers, I'm seeing tobacco, I'm seeing alcohol. Those don't tend to be, sort of long and strong. Those are more conservative places to park your assets. In terms of moving down, drug retailers you saw in here is one of the worst groups, and so that's something that's come down. But aerospace with the Boeing news and changes with the 737 MAX certainly has been affected. And mining stocks, so mining, steel, you have a lot of industrial sort of materials, basic materials types of groups that are down there. So again, we're just teasing the idea of these scooter reports and the industries. I would encourage you to look through there, click on one of these, actually look at the chart, look at some of the names that comprise those groups, and get familiar with what types of stocks have been moving, because I think on a week-to-week basis, it's a really logical time to try and make that analysis.